land. Corn and soybeans ending higher on Monday. Dave Chatterton is back with analysis. Okay, did the support in corn and soybeans come from just corrective buying or all of these export sales that we've seen on the flash reports?
Yeah, I think it's a little bit more the former, Michelle. I think there's a little bit of money flow issue going on in the markets. Certainly the export sales are welcome. They're needed. We want all of them that we can see, and they have improved. The pace has improved here, particularly in corn over the last few weeks. But I think the true story, this week and last week will probably be money flow as we get a little bit closer to not only an election, but also the next USDA WASDE report coming up that second week of November. If we look at what happened last week, funds, pretty aggressive sellers in the grains, they went, back to almost a net even in the corn and soybeans, and then ended up selling over 50,000 corn contracts and I think almost 20,000 bean contracts net last week. So some of that position got reestablished today as they moved back towards a more neutral stance. Michelle, it was a low volume trade, not a lot of significant new news for the market to work with.
So Dave, do you get this tug of war back and forth then? The specs sell, you get down into value levels where end users come in and buy, and then it goes back and forth, or not?
Yeah, unfortunately, I think we might be stuck here for just a little bit. We've certainly got a little bit of tail end harvest pressure, particularly, on the corn side where there are still some bushels out there. We're starting to see the piles get bigger, the logistics get pressed just a little bit. We've got an improvement in weather in South America, keeping a little bit of a check in the bean complex. And we've got Russia continuing to offer wheat at, steady to lower values and showing, no inclination to increase those values, keeping a check on the wheat export market. On the other side of that, as you said, we've got a little bit of positioning here. We do have, I think a desire by some of these money managers to get a little bit more neutral in their grain positions as we get into the election, certainly.
So can we at least say for the time being, corn and soybeans have probably been able to hold contract lows and will be able to going forward?
Yeah, I think it's a pretty safe bet, particularly in corn. It looks like we're stuck in a kind of a broader, $4.30 to $4 to $4.30 or $4.34 range. Beans haven't been able to push back above that $10 level. I think they're going to have trouble doing that, Michelle, unless we get, a weather problem redeveloping in South America, particularly in Brazil. On the downside, again, I don't think there's the appetite here to continue to push this lower.
Thanks so much, Dave Chatterton with Strategic Farm Marketing. We'll have more Ag Day coming up.